Yeah, absolutely. I think right now the big theme that we're still looking at closely is, of course, the data coming up with inflation in the US, right? From the prints of yesterday, lower than expectations, and what that means in terms of asset allocation, especially at the multi-asset level. So generally speaking, our stance on the equity side, from a strategic perspective, is still positive on European equities. That has been a trend that we have been holding in the portfolio on a strategic basis for some time, with a rebalancing a little bit on the US equity recently at the end of last year and beginning of this year, but still overall an underweight on US equities on a strategic basis. On the fixed income side instead, although the prints on US inflations were more benign than expectations, we still think that the Fed will be cautious on reducing, on cutting rates. So our base case is probably still like right now 50-50 between no cuts at all and one cut by the end of the year. So we're a little bit more hawkish than what the market is pricing. And I think there is an opportunity for being positioned on the yield curve on the US side, also with the dollar probably being stronger than what the market are pricing right now.
Okay, a lot of ideas there. The data is barely moving in many fronts. The core CPI was 3.3% from 3.4% in May. It's barely, it could go up a 0.1, it could go down 0.1, it might even go a mighty 0.2, 0.3, but we're talking about very, very small moves as well. Is the market on tenterhooks for, again, more of those 0.1s, or actually is the market expecting something bigger to come? Because it seems to me very small fare to base your portfolio decisions on, whether we're seeing 0.1, 0.2 in either direction as well. So I'm just wondering if there's a bigger thematic going on that actually is going to move the needle rather than us just hanging on to every CPI print.
I totally agree. I think that the market is as desperate for a cut. Also, the Fed, I think they would like to cut, and the implication also for monetary convergence. But I totally agree. I think that we're always looking at a 0.1 percentage point and minus or positive, and where it's going and what that really means for, especially at the multi-asset level, for being positioned.
But that's not enough to base your portfolio on, is it?
Agreed, absolutely. So from on a strategic perspective, we haven't really changed much. I think it's going to be very important in a couple of weeks probably what the CPE numbers are. This is what the Fed mostly looks at, and the impact of shelter. That will probably, from our perspective at least, might make us change something in the portfolio, but right now we haven't really made a move. We have been positioned with that base case of Fed being very cautious for some time, and we're keeping that position right now.